Gold has been humanity's safe haven for thousands of years, but in today's digital age, a new challenger has emerged: Bitcoin. In this episode of the Bitcoin Briefing, we'll compare Bitcoin and gold side by side and answer the question, which is the ultimate store of value in 2025 and what is going to get you the best return on investment going forwards. Let's jump into it. For centuries, gold has been trusted to preserve wealth. It's scarce, durable, and recognised worldwide. Nations hold it in reserves, and investors see it as a hedge against inflation and uncertainty. But while gold has stood the test of time, it's not without its limitations. It's heavy, really difficult to transport, and verifying authenticity requires expensive processes. And when governments want, gold can be confiscated, something that's happened multiple times in history. Bitcoin was designed to be digital gold, but it goes further. Its supply is hard capped at 21 million, making it scarcer than gold, whose total supply keeps growing as new deposits are mined. Bitcoin is portable. You can send any amount across the world in minutes. It's divisible down to 100 millionth of a Bitcoin, called a Satoshi. And most importantly, it's easy to verify. With a simple wallet app, you know your Bitcoin is genuine, something gold can't offer without costly checks. Let's look at a direct comparison between gold, the US dollar, and Bitcoin, using research from VanEck and Conway Investment Research. First, all three, gold, dollars, and Bitcoin, are fungible and non-consumable, meaning one unit is the same as another, and you can't destroy them by using them. When it comes to portability, gold is only moderate. You need vaults and trucks to move it. Dollars and Bitcoin are both highly portable, but Bitcoin goes further, since it can be sent anywhere in the world instantly. On durability, gold and Bitcoin both rank high. Gold doesn't decay, and Bitcoin exists digitally forever. Dollars, on the other hand, can be printed endlessly and even physically wear out. Divisibility is where Bitcoin shines. You can break one Bitcoin into 100 million Satoshis. Gold is only moderately divisible, and dollars are limited to cents. For security against counterfeiting, gold and dollars fall short. Fake gold exists, and fiat money can be printed at will. Bitcoin, however, is cryptographically secure and cannot be counterfeited. Next is ease of transaction. Gold is hard to use for daily purchases. Dollars and Bitcoin are both easy to transact with, Bitcoin being especially efficient for digital payments. On scarcity and predictable supply, gold is moderate since new mining keeps adding supply. Dollars are the weakest here, with governments printing at will. Bitcoin is the strongest, capped at 21 million forever. The dollar dominates the sovereign class as it's issued by governments, but Bitcoin flips this with decentralization. No central authority, no single point of failure. And finally, programmability. Gold and dollars are static. Bitcoin is smart money, programmed into contracts, applications, and financial systems. When you lay it all out, Bitcoin doesn't just match gold and the dollar, it outperforms them on most traits that matter for the future of money. From an investment standpoint, gold has held its value over centuries, appreciating a modest 7 to 8% over the past 14 years. Bitcoin, however, has appreciated at over 100% CAGR for the same time period. So investors must decide, do you want the security of tradition or the potential of innovation? And so to close this video off, gold protected wealth for centuries, but in the digital era, Bitcoin is redefining what a store of value means. The choice is yours. If you like this video, please like and subscribe for more Bitcoin insights. And as always, thanks for watching. We'll see you in the next video.